What if the next 40% crypto crash does not start in crypto at all, but inside a central bank meeting room in Tokyo? Right now, the Fed, the ECB, and the Bank of Japan are pulling in three completely different directions, and that quiet policy divergence is loading the spring under every risk asset on your screen. The Fed is stuck holding rates higher for longer because services inflation refuses to cool. The ECB has already started trimming because European growth is bleeding out, and the Bank of Japan is finally, slowly raising. That gap is forcing the dollar index higher against the euro, while the yen carry trade quietly unwinds in the background. And that combination has historically been poison for Bitcoin and altcoins. Here is the part most retail traders are missing. For the last 2 years, Bitcoin traded like a tech stock, with a correlation to the S&P 500 above 0.7. Ethereum was even tighter. But over the last few weeks, that correlation has started to break down. BTC is drifting sideways while the SPX grinds new highs, and ETH is actually underperforming both. When correlations decouple like this near a macro inflection point, it usually means smart money is rotating out before the broader market notices. Now layer in the crash scenario. If the dollar keeps strengthening on policy divergence, emerging market liquidity dries up, stablecoin flows slow, and leveraged altcoin positions get squeezed first. A move back to the 49 to 52,000 zone on Bitcoin is not a doom prediction. It is just what happens when global liquidity contracts and equities finally roll over together. Ethereum could see a sharper drawdown because of its higher beta, and most mid-cap altcoins would likely cut another 50 to 70% from current levels in that environment. So what do you actually do with this? First, watch Euro USD and USD JPY more than you watch your favorite altcoin chart, because they will move first. Second, watch the BTC to SPX ratio. If Bitcoin starts leading equities down, that is your real warning shot. Third, manage size. This is not the moment to be maximum long with leverage on a low-cap token. The setup right now is not about predicting the exact bottom. It is about recognizing that central bank divergence, a strong dollar, and a quietly broken crypto equity correlation are three signals stacking in the same direction. Traders who respect that signal survive the next leg. Traders who ignore it become the liquidity. If this breakdown helped you see the macro picture more clearly, hit subscribe to AItcoin Daily so you get tomorrow's setup before the market moves.